Good day, and thanks for taking the time to check in on our outlook for the year and reflections on 2021. Last year, global growth surprised on the upside as economies emerged from the COVID pandemic, and central bankers kept interest rates at record low levels for possibly longer than was necessary. Our market had its strongest return in a decade, up almost 10% in the last quarter and close to 30% for the year. In fact, outside of cash, which still struggled to beat inflation, most asset classes delivered double-digit returns, including South African bonds and global equities, which actually outperformed SA equities too for the year. Fortunately, our portfolios participated meaningfully in this environment, given we've been underweight cash for quite some time and positive on South African asset classes and global equities. Unsurprising, perhaps, given the extent of the stimulus last year and the bottlenecks from economies emerging from the pandemic. Global inflation spiked quite dramatically in the year. Despite forward guidance from the US Fed that it wouldn't raise interest rates anytime soon, and its view that these effects should prove transitory, towards the end of the year, the Fed did indicate the need to start raising interest rates in 2022. Inflation has been significantly higher than it expected. Locally, the SARB also started tightening towards the end of the year, with our first interest rate hike in November. What then does this mean for markets in 2022? Clearly, the extent inflation requires central banks to tighten aggressively will be the dominant theme this year. The market's quickly pricing in a number of interest rate increases from the Fed, and this is having an impact on the pricing of financial assets. Our view remains broadly positive still. We think lots of bottlenecks will start to ease as the global economy emerges from the pandemic, and the environment still remains broadly positive for growth assets. In our view, the Fed won't need to tighten as dramatically as the market's now expecting, especially if many of these inflation effects prove transitory. It's always difficult in uncertainty to stick to one's process and remain disciplined, but we'd encourage investors to do this in order to navigate this uncertainty. In our own portfolios, our managers are able to take advantage of volatility and mispricing to position their portfolios appropriately. And as long as investors can look through the short-term noise, 2022 might also be a rewarding environment for growth assets. In terms of our positioning, we remain bullish on South African assets outside of SA cash and still have significant overweight positions in South African bonds and South African equities. In our view, the market's still not giving South Africa much credit for implementing structural reforms, and there's the possibility of upside surprises, especially if some of the recommendations from the Zondo Commission prove to be a catalyst for change. We're pragmatic here, though, and are not requiring these reforms to take place for us to get some upside from the portfolios. But central banks aren't the only story for 2022. An important development will be whether the global economy is able to get more balanced growth this year, with the service economy still struggling to pick up steam and supply chain constraints not quite easing yet. We're also facing the transition to a less carbon-intensive economy, and undoubtedly this will impose a number of shocks for the global economy. Broadly, though, we believe these developments will be positive, and we still remain relatively upbeat on global growth. Inflation, too, we expect to moderate and to create an environment that will be positive for risky assets. In terms of South Africa, we remain positive on the upside potential of South African assets and still are overweight South African bonds and South African equities. Clearly, the reform agenda has taken time to materialize, but there have been a number of positive developments, and the Zondo Commission could prove to be a catalyst for change. In conclusion, I'd like to remind our investors that the future is always uncertain, and one needs to be able to stick to one's process through this uncertainty to benefit. Our portfolios have appointed a number of exceptional asset managers who are able to take advantage of times like these where markets are uncertain. As the US raises interest rates, so a number of companies' profits have been inflated, but we believe our managers are able to find meaningful opportunities in this environment and be able to add long-term benefits to our clients. So in short, 2022 threatens to be an interesting ride. Markets are likely to be volatile, but investors need to look through this noise and stick to their plan to reap the rewards. Thank you.